I think Bitcoin is at a good point in the cycle, and I think all Bitcoin stocks will do well. And I think we're in a position to maybe even do better.
Hey, welcome back, everybody, and thanks so much for making us part of your day and part of your due diligence when you look for smart and fresh plays out there in the market today. Now, we've asked you to add this next company into your watch list quite a while ago, and it's been a fun ride watching this company, which is Bitmine Immersion Technologies Incorporated. When we started with the company, they were an OTC company. Now they have upgraded to OTCQX, which is a major move for their company. And that move, along with some other great moves we discussed with the CEO, was outlined in a shareholder letter that was issued. Here's the dateline, Thursday, November 30th. Here's the headline: Bitmine Immersion Technology Incorporated issues letter to shareholders, highlighting corporate strategy and outlook. But there is so much more in this. We want to talk about it with the CEO. You can see I'm joined once again by Jonathan Bates, CEO of ticker symbol BMNR. Jonathan, how are you doing?
Great. Thank you for having me again, Stuart. Appreciate it.
It's wonderful having you back. There are actually things inside of this CEO letter that we didn't even know about. I mean, there's some great quotes from you. I want to get your take on it. I've got some specific questions myself, but just jumping into it, Jonathan, obviously it's been a very big year for your company here in 2023. There's ups and downs like there are for all types of companies, especially public ones, but you've been able to get a strong foothold and you gave us a great operational update. Let's get some color from you on it.
Sure. Yeah. So we maybe if it's a surprise, one thing regarding Kentucky, we were given a pretty short-term opportunity to buy and place a little over 1,000 miners at a co-hosting site in Kentucky that has 2.9 cent power. We're in a profit share with the owner of the site, and it was something that came together really quickly. It was brought to us by one of our ASIC brokerage partners, and they had the whole thing lined up, financing through a hash rate derivative, which is kind of a fancy form of pre-sold production, and the hosting contract, everything. So it really significantly increased our monthly production beginning November 1st, this month. So it came together in October. We jumped all over it. We bought the machines. We had them cleaned, sent to the site, and plugged in. And then they started running November 1st, and virtually all of them are working right now. We're going through about 5% of a warranty issue on some of them that weren't working properly, but mostly they are working properly, and mostly they're running at what they were expected to run.
Yeah, that's great news. And here's one of the quotes or part of this CEO letter from you. We have 1,400 plus machines running with another 200 plus machines coming on imminently. Let's talk about what it means to be super overclocked. Can you define that for our listeners that may not know what that is?
Yeah, I mean, it's a really nuanced a term from those of us nerds and in the immersion space. But when you run a machine, more or less, the current generation has been around 100 terahashes per second. That's the mining output you'd expect on a machine. They go up to about 130, 140, even 150 now. They've kind of leaked a little bit higher. Next generation's around 200 terahashes a second. But if you just, for simple math, take a 100 terahash machine, which would be a standard machine, if you're able to super overclock that machine, you can get it to go to 150 or 175 terahash. That's only something you could obtain in immersion, because the machine runs hotter if you derive more power out of it, more yield out of it. And so you need something like immersion to disperse the heat in order to run that way. So we've got a system where we can use a couple of plugs on one machine, and you lose a little bit of efficiency, but you gain a lot of extra yield out of the same machine when you do this. So we're able to get, not twice the production out of a single machine, but a lot more.
Well, very good. Now, coinciding with this big CEO update from yourself, you also just participated in something put on by the OTC markets. It's their virtual investor conferences, and that's where you find this, virtualinvestorconferences.com. We've got a screenshot of your presentation here today. There is a PowerPoint that you basically narrated. You went along on what are the foundational building blocks of the company. But one of the things that you touched on was the three major revenue streams for your company. And one of the things that we know from our research and dealing with other companies in this space is that machine resales is a hot topic right now as well. But can you break down your three revenue streams for us now? And let's touch on that machine resale part.
Sure. I mean, if you have a Bitcoin mining data center operation, which we do, you can either run your own miners or host other folks' miners. And so right now we're mainly running our own miners. I mean, I think, 2% or less of our production is other people's miners that we're hosting, but we're mostly just running our own miners, and that's highest upside potential, and also the most expensive. When we started this endeavor a couple of years ago, the data center equipment was really expensive, but way less expensive than the actual miners. So some of these miners that were $10,000, are now like $700 or $1,000, and so it makes more sense to run the miners ourselves, just given what's happened in the market. So we're mostly running our own miners. I discussed hosting because when you host, there's less upside, but it's safer because you have their machines as collateral, and then you charge them a fixed markup usually. It's either a profit share or a fixed markup on the electricity you're paying or the rent or whatever your site costs are. So it's a predictable cash flow stream, just like any data center. I'll add what I mentioned is that we were approached by an AI company to host some AI GPUs at one of our sites, and so they're better hosting clients because they pay more. So we're kind of intrigued by that. I mean, obviously we like the idea of having an AI client, but they're more profitable. So maybe something will happen there. We're speaking to them right now. And then the third is the machine resales. And so we do have a lot of contacts and where to buy machines, and we own a lot of them ourselves, and so we feel like we can get more engaged in selling machines, and just given our expertise. So we're going to try and create an initiative where we're more engaged in that market, and in a market where these companies like ourselves are measured by your revenue and a multiple of that. It's good revenue, quality, high volume revenue that we could pick up, and turn over on a very consistent basis.
Well, you talked to us about the Kentucky location. You've got your flagship location in the beautiful Trinidad area. And then also here in my great state of Texas, you have your joint venture in Pecos. And again, audience, you can go right and use that ticker symbol BMNR, go to your investing platform, your Yahoo Finance, find the updates on these. But something else that jumped out to me, Jonathan, as I mentioned at the outset, at the end of September, you were able to uplist to the OTCQX. And of course, the next question is, which you mentioned here, is the next step the NYSE? Is it NASDAQ? What do you see as that path? And is that something you'll be working on in the year 2024?
Yes, I mean, it's certainly a goal of ours. There's all sorts of little nuanced things around what it takes. We don't necessarily even need capital. You need a certain amount of certain qualified share float, and what's deemed affiliate, non-affiliate shares. There's all kinds of little nuanced things. There's nothing keeping us from that in terms of capital. I mean, we've got the really execution wise, we've got enough of a business to make an application. We have independent directors. We have everything I think we would need to make the application, as far as my knowledge of it. Just minus a little bit, a little bit higher share price maybe, and possibly a few more shares in the tradable float. But these are things that take care of themselves over time.
Yeah, absolutely, they do. And we will actually educate people all the time on what some of those requirements are, whether they're for the NYSE, whether they're for NASDAQ. let's talk about the industry itself. We saw a small for him, Jack Dorsey, former CEO of Twitter, now X, putting in some money in this area, 6.2 million infusion. That news came out November 29th, dealing with the company Ocean. As the industry, as you see it in 2024, we've talked about some of the cyclical nature of it. What do you see happening? What's the landscape look like, not just for your company, but the industry as a whole, the mining industry in 2024?
I'm a very big believer in these 4-year cycles. The halving going to occur next year. Generally, that's an immediate pain point for most miners. And it happens if your block rewards are cut in half, your revenue is gone, it gets cut in half overnight. So you might ask yourself, well, geez, why is that good? Well, it's good because of the dynamic that has occurred every other time in the past, which is the supply of new Bitcoins persistently sold. Miners are big persistent sellers of Bitcoin because they have to pay for their electricity and their sites and their staff and all the other things that it costs to run a mining operation. So you take the biggest persistent sellers and cut the number of coins they're selling in half right away. And you take generally a repaired psychology of the marketplace after the last boom and bust and trough up, and you pair, if you did nothing else, if you just had the same amount of demand and you had the supply persistently sold cut in half, that's good for the price. But everyone knows this is a thing now, especially, and in past runs, it's been, 10, 20x, kind of a thing. And, maybe it's, not, it's gotten a little less pronounced each time. The bigger the price gets, the harder it is to go up 10 or 20 times, but I would expect it to, if it doubled, you're back to break even, right? So we expect it in our own humble opinions to way more than double, make up for it. And the mining profitability tends to creep up, within the first 3 to 6 months after the halving. But then after that, that's generally the start of the bull run. So, if you're just taking past cycles into account, late 2024 to late 2025 is probably a good earmark for when you'd expect the most powerful part of that rally and the most profitable time to be a miner, both.
Well, let me bring that home to your letter again that was issued today, November 30th, and talking about the joint venture in Pecos does have an output of about, if you're at optimum efficiency, about 1.25 Bitcoin per month. Let's see, fully deployed, current payout at difficulty rates. We expect 1.2 Bitcoin of revenues from 1.25 Bitcoin of revenues from Pecos monthly from our self-mining portion. So you really do have skin in that game as well.
We do, and the joint venture itself is all in with ours and the joint venture assets. It's about 5.5 megawatts. It could expand to 10. We're talking about ways to try and be part of that expansion as well. So right now these things change all the time. Of course, the difficulty rate, the price of Bitcoin, all of it is a constantly moving target. But if each one of these containers for us right now as we speak, maybe 1.2 Bitcoin or so, given that we're overclocking the machines that we're using. So yeah, you can kind of do the math. We own 30% of the rest of the facility, and we're trying to deploy things through there. There's a hosting client in there that they own some machines for themselves as well. We own about 30% of it. So of course, we're in constant consultation with them about what to do, and yeah, I mentioned too there. There's some operational things going on there. We're trying to refine the heat rejection a little better than it has been. It's a hot summer in Texas, by the way, as you know.
Yeah.
So we're working on ways to try and get it to cool better during the hot months. And so, just like any industrial business, it's not without a million little things that you have to work through, but it's something we know. We've been running these things for quite some time.
Well, we are speaking with Jonathan Bates. He is the Chief Executive Officer of Bitmine Immersion Technology Company Incorporated. ticker symbol on the OTCQX BMNR. Jonathan, before I let you go, I'll leave you with this last question. So what gets you excited about BMNR going into 2024?
Well, I would say this, Bitcoin miners in general are generally a high beta representation of Bitcoin. So if you like Bitcoin, a juicier way to play Bitcoin thematically has always been the miners. There haven't been a lot of them to choose from. Now there's more of them to choose from. And if you look at the landscape of the companies that are out there, you have some companies that, you know, and unfortunately, a lot of the smaller ones took on some debt. Maybe some didn't, but a lot did. And they're saddled by the history of that. The big guys, you know, Riot and Marathon, you know, kind of benchmarks for the industry. They should do well. CleanSpark, you know, our new board member was a former CFO CleanSpark, Lori Love. They're one of the largest in terms of exahash. These companies will grow and they can grow, but we can grow quicker because we're smaller. The debt we have is only from my fund. So, you know, it's not like we're saddled with a bunch of onerous debt or anything. We can expand and we can grow our revenue multiple much quicker than a bigger company can. It's a lot easier to go from 3 or 4 million in revenue to 10 million in revenue, or 20, than it is to go from 100 million to 200 million. It takes a lot more to do that. And so more than just the price moving, it takes a gargantuan effort. So I think we're in a position to grow a lot quicker. I think our revenue multiple relative to our peers is lower. So we can grow quicker. We're at a lower multiple. Bitcoin's going into the cycle where it would historically make a big move. And we think we're in a position to execute our growth better than our peers. So that excites me because I think we're cheap. I think we're on a relative basis. I think Bitcoin is at a good point in the cycle. And I think all Bitcoin stocks will do well. And I think we're in a position to maybe even do better.
Yeah, that's terrific. What a great summation and breakdown right there, Jonathan. I appreciate that, and pointing out that you're lean, you're mean, you're adaptable. But not only that, with where you're priced at currently in the market, your price per share, there's so much more headroom and growth room for a company like yours than for some of the bigger companies. And as you pointed out, you're not bogged down by that debt. The debt you have is managed by your fund itself, which that is a beautiful thing for investors and potential investors to know, and why you need to add BMNR to your watch list. Thanks so much for your time today, Jonathan.
Thank you. Appreciate it.
All right, for Jonathan Bates, this is Stuart Smith saying take a closer look, ticker symbol BMNR. If you have any questions about the company, leave it in the comment section below or reach out to us directly at smallcapvoice.com. Thanks so much for tuning in.